This is Ralph Sass. This is the lecture for Accounting 212, Chapter 4. And once again, this will be in two parts. Each part about 20-25 minutes. In Chapter 3, we talked about job order costing. And so this chapter moves on to process order costing. And what we're going to start with here are some of the similarities, some of the things that are the same between the two. First off, okay, both systems assign labor and overhead costs to products, okay? And keep in mind, when we're looking at the difference between job order costing and process costing, we know the direct materials and we know the direct labor, okay? So the big part of it is how do we allocate those overhead expenses. So both systems are going to use the same manufacturing account. So our journal entries are going to be very similar as far as having a manufacturing overhead, raw materials, work in process, and finished goods. So the ledger accounts are the same. Okay, and the flow of the costs are similar in both systems. Okay, we're going to find out, I think, on the next slide or in the next couple of slides that there's a couple of minor differences. But for the most part, it's flowing through in the same way. So now the differences. Okay, first, process costing is used where a single product. We talked about that before. Okay, and job costing is done where there are a lot of different types of jobs, like the accounting firm, the law firm, or things like that. So what we're going to be talking about is where a single product is going down the assembly line and they're all the same. Paper at the mill, Coke coming out of that Coke factory, what have you. Okay, now this is probably the biggest difference. Process costing systems accumulated by department. Okay, whereas job order costing did it by jobs. So in the last chapter where we had individual job sheets, we're not going to have those anymore, but what we're going to do is have departments. And the way to think about this is as an item is moving down the assembly line, okay, we're going to have different parts of the assembly line into a different department, and when they request parts or what have you, those part requests, whatever, are going to be assigned to a department and not assigned to a particular job. Okay, and finally, process costing systems compute unit costs by department, not by job. So where in the last chapter everything was done by the job, now we're going to be doing things by department. Okay, so where is process costing used? Process costing is used where you've got an assembly line and all the items coming off that assembly line are very similar or exactly the same. Gallons of paint, bottles of Coke, paper at the mill, every one coming off is exactly the same as the one preceding it and after it. So now what we're going to do is we're going to collect these costs by processing department. And a processing department is where any place where, okay, materials, labor, and overhead are added to the product. Okay? So what happens then also, if you think about this, is all activities in that particular department are performed uniformly. So everything is being done the exact same to each product that's going down that assembly line, whatever. Okay? So that's what's kind of going, that's exactly what's going on here. Now, we're still going to have direct materials, direct labor, manufacturing overhead going to work in process, going to finished goods, and going to cost of goods sold. But the difference, okay, is that in the last chapter, everything went to the job, okay, job number. In law firms, it's often by the client name, what have you. So in the last chapter where it went by jobs, now it's going to go to the processing department. Okay, so costs are going to be assigned to a particular processing department, not to a particular job. Now, for purposes of this example and throughout the course, we're pretty much going to use two departments, Department A and B. And the way to think about this is, you know, items are going to start here. Okay, they're going to go into Department A. They're going to do whatever needs to be done, whatever. They're going to then go down the assembly line to Department B, and whatever's going to be done there is going to be done there, and then finally they're going to be into finished goods. Okay, so that's the way to consider what's going on here. We go, goods start out, or the product starts out, we process it in Department A, gets shoved down the assembly line, whatever, goes into Department B, they do whatever they need to do, and then it goes out into finished goods. In the real world, might there be hundreds of processing departments or a multitude of processing departments? And the answer is yes. Okay, but for purposes here, we're just going to have those two departments. So notice what's going to happen. We're going to still have a raw materials account. We're still going to have a raw materials account. And now what's going to happen, though, is when there are requisition forms, or when materials are required, some of those materials will go to Department A. Probably different direct materials, maybe a different chemical or a different item or what have you will go to Department B, but direct materials will come out of raw materials and go into Department A and Department B. So that's just like it was before. Only difference is in the last chapter, these items here wouldn't have been departments, they would have been jobs. Okay, and notice this is the journal entry. We're debiting work in process to put it into work in process. We're crediting raw materials to get it out of raw materials account. Very similar to what was done in the last chapter. Direct labor, the exact same thing. Okay, you look at these you look at these T accounts. We'll see the journal entry next. You look at these T accounts, it's exactly the same. We have direct labor, we have men, women, what have you, working on that assembly line, what have you. When we pay them, it gets assigned to that particular department. And once again, some of it will be, in this case, to Department A, some of it will be to Department B. And then, same thing applies. We're going to have overhead that's going to be applied. And once again, a couple of quick notes here. Remember from the last chapter, actual expenses go on the left of the manufacturing overhead. Applied expenses go on the right. Okay, and we're going to put them in Department A based upon something, and it could be labor hours, machine hours, labor rates, what have you. It could be a different rate for Department B, and that's okay. Nothing wrong with that. So we're still going to apply the overhead. Okay, so all of that looks very similar. Okay, then notice what's going to happen is this is going down the assembly line. Remember I said we're going to start off in Department A, then it's going to go to Department B. We have all the stuff in there. We have the direct materials, the direct labor, and the manufacturing overhead. What we're going to do is we're going to transfer it out to Department B, and then that becomes an additional cost there in Department B. Theoretically, when this is done, that's going to be zero because the direct materials, direct labor, and applied overhead are going to be gone, and they're going to be transferred on to Department B. And then ultimately, what are we going to do? We're going to transfer it out of Department B. Okay, we're going to transfer it out of Department B and transfer it into finished goods inventory. And that's my cost of goods manufactured. Okay, and theoretically, once again, once this is transferred out, it's going to be zero. We're going to find out it's not going to quite be zero because keep in mind, we always have some stuff left. A lot of manufacturing plants never close, never shut down, never have absolutely nothing in Department B work in process. Okay, there's always some there, but the theory would be is that ultimately, if you did close it down, that would be zero. And then finally, when you do sell the good, it comes out of finished goods inventory as cost of goods sold, shows up as cost of goods sold. And keep in mind, just like we've studied in other accounting classes and last semester and whatever, that's going to show up on my income statement as cost of goods sold, which is ultimately an expense, which is why it makes sense to have it over here as a debit. So it's just kind of flowing through the exact same way, if you will, as it was in Chapter 3. Only twist is that now we're doing things by processing departments and not by customers or products, what have you. Now the problem. What we need to calculate are what we call equivalent units of production. Okay? At any given time, at any given time, there are going to be some partially completed units, and they're going to be partially done. Okay, so what we need to do is calculate what we're going to call equivalent units. And what we're basically going to say is if we have 2 units and each one is half done, halfway complete, that equals 1 being all done. Okay, that's going to equal 1 being all done. Okay, so it's these partially completed units that are going to make our life here in this chapter more difficult. And basic idea is that 2 half-completed units are equivalent to 1 complete unit. And notice what this means in the grand scheme of things. What this means in the grand scheme of things is that 10,000 units, okay, 70% complete, are equivalent to 7,000 complete units. How'd they get that? 10,000 times 0.70. So that's how they went ahead and got that. So notice, they started 15, whoops, I'm going to flip over here, sorry. They started 15,000 units, completed 10,000 units, leaving 5,000 units in work in process that are 30% complete. How many equivalent units did they produce? Well, the first thing is completed units are always completed. So those are always completed. We don't have to worry what they started with. All we have to worry about is what they ended with. And this is another complication for the chapter that we're going to talk about here in a couple of minutes. So what they had is they had 5,000 units that were 30% complete. So we have to take those 5,000 units that are in ending work in process, multiply it by how much they're complete, which is 30%, and we will get 11,500 equivalent units. Okay, so what do we need to worry about? How many were completed and transferred out, and then how many are left, and how far done are they? How much through the process have they gone? Okay, now, calculating equivalent units can be 2 ways. Okay, I will have a very brief, at the very end, discussion about FIFO, but for the most part, what we're going to be worried about in the main part of the chapter is the weighted average method, and to be quite honest, everything I'm teaching you here in the main part of the chapter is the weighted average method, and to be quite honest, that's what you're going to be held responsible for on an exam. Okay, now some things about the weighted average. It's not as 100% accurate as FIFO, but it's for most of us it's going to be good enough, especially where we have just-in-time inventory, we're ordering just enough, what have you. Weighted average will be, and I hate to use the words, but good enough. Okay, now some things. Weighted average makes no distinction between work done in prior and current periods. Okay, all we want to know is how much work was completed, and we're not going to worry about how much of those 10,000 units from that prior example were partially done in the prior period. Now, what it does is it blends together units and costs from prior and current periods. So what it kind of creates is a potpourri, if you will, of costs. It throws all the costs into the pot and calculates an average, and it doesn't make a distinction between those costs were in the prior period or this period. Just throws them all in there. Okay? And then it determines the equivalent units of production for a department by adding together the number of units that were transferred out, which we talked about in the last slide, if you'll recall, the amount transferred out, plus the equivalent units in ending work in process. So everything you saw in the last 2 slides was the weighted average method. Okay. Now, what's going to happen to direct labor? In general, when you look at these manufacturing plants, direct labor is relatively small compared to the other costs, okay, because these things are going down an assembly line or what have you. In the grand scheme of things, direct labor is relatively small. So what typically happens is they add direct labor to manufacturing overhead, and they call that conversion cost. And keep in mind, we saw that term back in I think it was chapter 2, we saw that term used before. So now notice what's going to happen, and this is an example that we're going to be talking about here. They reported the following months in June, and this is very common for the types of items I'd give you on an exam, on a quiz, what have you. What's the work in process at the beginning, and how far complete was it? How many units were started? How many units were completed and transferred out? How many units are left? And how much done? How complete are they? Quick note, the 6,300 here, the amount you start with plus how much you add in production, okay, has to equal the amount transferred out and the amount left. Okay, so those two numbers have to total each other. So we have 6,300 units that were either in process or started, and 6,300 units that were transferred out. Has to be. Notice the percentages here do not need to be the same. In fact, quite frequently they'll be different. Okay, those percentages don't have to be the same, but the total amount of units that we're accounting for do have to match up. When we're figuring out weighted average, okay, the amount that's transferred out is always transferred out, so they transferred out 5,400 units. Quick note here, we're making a distinction between those goods, materials and conversion. Okay, materials are the materials, conversion in this case is the direct labor and the manufacturing overhead. Very, very common. Very common. Quick note, and I'm going to go back a slide here. Notice that when they calculated the percentage completed, they gave you the percentages both for materials and conversion. And note they're different, and I don't want to say it's common, but it's not unheard of for those numbers to be different percentages. Now, for work in process, they had 900 units, and those 900 units were 60% complete for materials. So my equivalent units of production for materials is 5,940, 5,400 plus the 540. And for conversion, I still had 900 units. Okay, I still had the 900 units. It was done by a different percentage. So my number of units is 270. Now a quick note, these are in units. Okay, these are units of production. It is not costs. It is not costs. These are units of production. Okay, we need to make sure that we keep that straight. So, notice, and I already mentioned this, the equivalent units of production always, okay, always equals the amount transferred out plus the equivalent units remaining in work in process. So those two numbers there are equivalent units of production. Okay. This is for materials. Okay. Beginning work in process, 5,100. Okay. Beginning work in process, was 300 units that were 40% complete. 5,100 units were started and completed, and 900 were left in ending work in process. Okay, and we already calculated that 5,940 equivalent units there. We can do the same thing for conversion. Okay, 5,100 units were started and completed, but 5,400 units were completed. And 2,700. Quick note here, just so we're clear. The question is, how come there's 5,100 units that were started and completed, but 5,400 units were completed? In essence, what we're saying is those 300 were done as well. So those were the total that were transferred out, hence that 5,400, and then 900 here at 30% gives us that 270 for the equivalent units there. Now what we need to do is apply the costs, and I am going to start the second video with this slide.